Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. In a short while from now, we'll connect with our experts and try to get as many queries as possible and their answers for you. And we'll also focus on Titan, what's happening there and why the stock is drifting after the earnings. We'll try to decode that. But for now, let's have a look at what the markets are up to. So Cheryl, fine, you're not wearing red, but the markets continue to be in the red color for now. But we are trying to defend that 19,500.
Told you so, isn't it, Shrishti? That I'm not the reason why the markets are falling. But very good morning to you. But yes, markets are pretty flat. If you could put it in that way, because we are not seeing that much of a fall. What we've been observing over the couple of trading sessions, or rather yesterday's trading session, if I stand corrected. So right now, 33 points decline coming in for the Nifty. The Sensex is down about 150 points. Nifty Bank is the one that is underperforming the benchmarks. Almost 0.4% downtick coming in for Nifty Bank as we speak. Taking through the list of gainers, then you have Adani Enterprises. That is the top gainer on the Nifty. 2.5% uptick coming in for Adani Enterprises. Sun Pharma ahead of earnings, 2% uptick. NTPC, Adani Post, Divi's Lab are the other counters that are gaining. On the flip side, it's Titan that's reacting to his number, 2.9% downtick coming in for Titan, 2.7% downtick coming in for UPL. You have HDFC Life, Bajaj Finserv, Ultratech are the other set of losers. Add to that list as well. You have TCS that is declining in excess of 4% right now. Taking note of what the sectoral indices are doing, one very, very bright spot in the market definitely is the Pharma Index. 1.7% uptick coming in for Nifty Pharma. And look at the constituents, be it Aurobindo Pharma, be it Lupin, be it Sun Pharma, be it Cipla. All of them have seen good gains in today's trading session. There you go, Aurobindo higher by almost 4% as we speak. But on the flip side, you have Realty Index that continues to see some sort of a pressure of 1.5% downtick coming in for Realty Index. You have Metal, IT also declining in trade. Even PSU banks are actually weak in today's trading session. So that's the way how the markets are looking like. But a lot of stocks that are in focus, not to forget. Finally, the Ambuja Cement and Sanghi Industries deal has also come out. So those are the stocks that we will focus on. Also, you have Titan, like Shrishti mentioned, on earnings, Indigo on earnings, Mankind Pharma on earnings. So a lot of stocks to discuss when it comes to earnings specific, isn't it, Shrishti?
Well, yes, absolutely. But Cheryl, let's just focus on Titan. That stock is now down about 3% after not a great set in Q1 because the profit and EBITDA has come in below the street estimates. But the brokerages are not very pessimistic about the outlook going ahead. What brokerages are highlighting and how are the numbers shaping up this time around? Let's get all those details from our colleague Winnie Motiwala. Winnie, take it away.
So Titan's Q1 numbers clearly not shining bright as any jewelry that they sell, and a miss coming in, especially on the margin front as well as the bottom line. That's the profitability front of the company. Revenue growth came in at around 24% for the year. In terms of demand trends, the company did highlight that Akshaya Tritiya was one of the things that supported the growth, and other than that, May was a bit subdued, but June again saw a recovery because of the wedding season dates coming in. When you look at the margins, sharp miss over there, and margins just came in at 9.9% versus 12.9% last year. So contraction of around 300 basis points in terms of the margins of the company, and overall the EBIT margins, when you look at that front also for all the different segments, that is jewelry segment, watches, wearable and eye care segment, all of them have seen a decline coming in all the three segments in terms of the margins of the company as well. Now obviously what is impacting is that the gold prices volatility that was there, plus the company had given a lot of promotions in terms of to fight the competition because of this gold price volatility. There was a gold program exchange as well which took place as well, and which was the reason that we saw the impact coming in on the margins of the company. Other than that, when you look at it, the commentary that has come in, they said that they're pursuing to gain market share across categories. They remain optimistic in terms of the performance for the rest of the year, and in the con call they also highlighted that they are expecting festive season, wedding season to actually start supporting the growth in the second half of FY24. They expect the demand, and what they saw in terms of demand trends in July also was stable demand trends as much as they saw in June. Not a bad bad demand that they saw coming in July as well. They are giving a target of 10% market share in the jewelry business in the next 3 to 4 years, and jewelry margins, they expect that to be at 12 to 13%. They are expecting and maintaining that guidance of 12% jewelry margin for the year as well. So keeping an eye on that one. HSBC as of now has cut the target price for Titan, given the new target price at 3,580 rupees per share from previous target price of 3,600 rupees per share, and they are maintaining a buy on the stock, given that we are seeing a miss coming in the margin front for the company.
All right, thank you so much for that, Vinny, for putting into context what exactly transpired when you talk about Titan in the quarter gone by. Remember, the stock is the top loser in today's trading session. That's top nifty loser in today's trading session. So let's bring on board our experts today. We have Kunal Bothra as well as Ashish Kapoor joining us on the show to understand what should you do if you're already holding Titan, or is it the right time to go ahead and venture into this particular stock. A very good morning to you, Kunal, as well as Ashish. Thank you so much for joining us on Buy Now Sell Now. And Ashish, let me come to you. Yes, a margin sub 10% coming in for Titan. Do you think that this is just an aberration, or do you expect this pressure to continue for Titan going ahead as well? And also, in light of this, what should investors do?
Well, I think, yes, the results were disappointing. Now, there are three things in it. One is that I think, this is an aberration because management has clearly, declared that, the margins would improve going forward. To begin with, I think all the segments, they showed a good rise in the top line. I mean, whether it was jewelry, whether it was, watches, the other wearables, all of them have shown a very decent uptick in volume. It's just that the margins were under pressure across. I think there are reasons for it. One is, of course, the aggressive discounts which the company offered to maintain its market share. Second is, I think they intentionally have marked down the gold prices due to extreme volatility in that asset. And thirdly, I think they are trying to deliberately promote the non-jewelry business, which required a lot of investments upfront. So I think all these things would, ease out going forward, and that's what the management is also saying. Keeping in mind that this management has generally guided well, and the company has also created a lot of capital for investors in the past. So one can believe the management when they say that the margins are not there forever. They're going to be improving going forward. And thirdly, yes, when it comes to investments, Titan has always been a very good stock to have in one's portfolio. So I think any adversity, any weakness because of a bad result should have a great buying opportunity. And I don't think this is an exception. I think if you have missed out on Titan earlier, this does present a good buying opportunity on the way down. Buy it in a staggered way, and I think this will the story will continue, and I think this will create good value going forward.
Okay, so that's the take coming in on Titan. The management continues to sound bullish, as well as any opportunity where you can buy the stock at a lower price should be taken positively for accumulation. But Kunal, coming to you on the technical front, because just last month we have seen a breakout happening for Titan, but all that momentum is seen to be fizzling out. So onto the charts, do you see any further weakness in Titan, or you are also of the belief that one could accumulate this particular counter? And from the trading perspective as well, how are the charts panning out?
Good morning, everyone. So, my sense first is that look at the pedigree of the stock which you're discussing. The stock has had a fabulous history over the last 2 decades or more of generating some excellent returns, consistent returns, trying to ride the tide for the last 2 decades amidst so much of volatility for itself. Now, in these kind of stocks, you should ideally use a strategy of buy on dips, and specifically the stock retraces back towards its long-term averages or 200 DMA. In technical parlance. So I think that 200 DMA for Titan now is at 2,700 approximately. So which means traders could look to, or rather investors could look to start participate at current levels, 2008, 80, 90, where the stock is trading right now, and then wait out for maybe another 100, 150 points correction. Closer it is towards its long-term moving averages, the better the risk reward is to initiate longs for the stock, because we've seen historically that the stock has that turbulent phase for period of 3 months, 6 months, but then it recovers and then tries to make a new high for itself. So I think in that regards, it's a strong buy on dips, specifically closer to that 2,700 mark.
All right. Strong buy on dips is what Kunal has to say on Titan. So that's the view coming in from both of our experts on that particular counter. But on that note, viewers, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your queries. So don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that'll be flashing on the top of your screen. Do remember, every time you message us and not call, you message us, mention your name, the stock that you're looking to invest in. If you've already invested in the stock, then do mention the buy price as well as the quantity that you've purchased and the time horizon that you're looking to hold a particular counter, because in that way, our experts will be able to help you better. But with that, let's get going with the queries that have already started pouring in. And the first one is coming in from Shamala. And Shamala wants to know about PFC or REC. Does it make sense to buy either of them for the long term? And the long term is around 3 to 5 years. Ashish wants to know whether it's also good for a medium-term perspective. She wants to know whether she can expect a 15 to 18% CAGR on these counters, and which above these counters do you think will fit that bracket? So A, PFC or REC, good to buy right now for a long-term period or for a medium-term, with the fact that she wants a particular growth, like 15 to 18% CAGR growth in the time period. Ashish?
Yeah, I think while these stocks have done very well in the recent past and have been rank outperformers, I think, my own take is that, they have kind of run up a lot. They are usually, these utility stories are not secular growth stories. They have their time, and period when they do well. They are good to buy when they are actually very cheap and when the focus is not on them. And then if you hold it, then over a period of time, whenever the interest comes back, you make a good return. I really don't think that this is a good time to enter REC or PFC. While their valuation is still comfortable and there's no question on their earnings model going forward, I don't think at this price and after the run-up, they merit any attention or they merit a buy. I think at best you can hold on and perhaps ride it for a little longer if you bought at lower rates. For 18 to 20% kind of return, there are many other opportunities. I think within the you want to play the power, theme with some sort of risk, because it's a new thing. But the renewable energy space is somewhere where you can focus on. But that can be a more secular kind of a growth story. Something like a Borosil Renewables or an SW Solar could be the stories that you could track and try and buy them. They are more secular and can grow for many years going forward. These are utility companies, REC or PFC, finance companies, utility companies. They have run up and they are public sector units. Don't forget that. Usually after a run up, I think they cool off, and I don't think that pattern is going to change really. There's nothing to say that pattern is changing, and so therefore I would not recommend a buy at this level. I would think that there are many better ideas, like the two examples that I gave you.
So that's the take on REC PFC as well as the alternatives that Ashish just suggested you. But Kunal, the next question is on Dixon Technologies. Rajesh Maheshwari has been holding 50 shares from an average price of 5,025 rupees, though the stock has shown a decent run up in the recent past, but still below his below his purchase price. So what's the outlook from the short to medium term perspective, and what should be the course of action?
See, my belief is that the stock has seen the worst behind its, in terms of the price correction from 6,000 levels. I think in 2021, the stock had fallen down to below the 3,000 mark, which means a more than 50%, 60% correction. And from 3,000 or sub 3,000 levels, it's now come back towards 4,500. I think 4,750, if I'm not wrong, was the previous high for Dixon Tech. I believe it's a very strong chart. It's an emerging chart. The stock has retraced more than 50% of the correction the stock had seen for itself, which means that there should be more upside left for the stock. Now, the only question is patience over here in time frame. If your time frame is not restricted towards immediate short term or short term, then I would believe that it makes a lot of sense to hold on to the stock. If possible, look to add further if the stock corrects sub the 4,000 levels.
All right, just take a note of the flash on the bottom of your screen, because you have a note that is coming from Directorate General of Foreign Trade saying that the India has import curbs on import of laptops, tablets and computers. We are waiting for some more details, but let's take a look at what Dixon Tech is doing right now in trade, because if you look at that particular counter, Dixon Tech is seeing a sharp spike on this particular development. As you can see, 4% uptick coming in for Dixon Tech, and what DGFT is saying that they've restricted import of some computers and components that includes laptops and tablets as well. So keep Dixon Tech in focus on back of this particular development. But let's move on and let's continue taking your query. And this one is coming from Sri, he's writing to us from Cochin. He's holding 80 shares of Amara Raja Battery at a price of 650 rupees per share. He wants to know what's the short-term view of the stock from technical perspective, and he wants to know if it's a good time to accumulate this further or exit completely, since he's believing, or since what he's witnessing is the trend is on a downward momentum. Kunal?
Well, yeah, so your analysis seems to be right, or at least in sync with what I would believe for Maharaja Battery. I would believe that the stock is a huge underperformer, and I think a better bet for if you're looking at the battery space as such, is definitely Exide. The stock has clearly shown signs of breakout. It's confirmed those breakouts on the short term as well as on the medium term chart. So it's always better to shift out from Amara Battery towards a performing name. The other reason for Amara Battery is the stock forming a bearish flag pattern on the daily charts in the last 2 weeks of price correction for itself, which means that there should be additional pressure in the next 2 to 3 weeks for the stock price on the way down. So better to make that switch.
Okay, the next query, Ashish, is on Tube Investments. Shishir Patnaik from Odisha has bought 120 shares from a price of 3,100 rupees and wants to know the medium-term outlook in this one. What we are seeing in the past 10 to 15 days, the stock has been drifting lower. So what's the outlook going ahead? And 3,100 and above are the targets that he should expect?
Well, I haven't tracked it lately, but generally, Tube Investments has been a very good stock. It has created a lot of wealth. Its company was doing quite well. I don't know what the recent developments are though. But generally speaking, I can say that it's a stock which you hold on. I think medium term has to be defined what it means. But if you, I think, hold on over a period of time, you should recover your cost and also make money on it. The company is doing very well and fundamentally nothing wrong with it, and has a history of good investor returns.
It's coming from Dr. Subaya, writing to us from Tamil Nadu. And Kunal, 2 queries directed towards you only: Persistent and FEM Industries, short to medium term. The viewer already has Persistent, 50 shares at a price of 4,816 rupees per share, while FEM Industries, he's got some 30 shares at a price of 1,885 rupees per share. He wants to know whether they are advisable. Is it advisable for him to continue to hold on to these counters for the short to medium term?
Well, I would definitely recommend to hold on. So look at it this way, that Persistent managed to outperform most of the IT peers, Midcap, as well as, of course, if we can compare with large cap names, in the worst of the IT phase in the last 1.5 odd year. The stock, I think, if I'm not wrong, was one of the first bunch of mid-cap IT names which managed to make a new high just about a couple of months back, at a point where most of the large cap and mid-cap IT stocks were underperforming. So that itself tells you the quality of the stock price. Even if it goes through its own patch of correction, I think that should be taken as a good entry point or a point to accumulate Persistent. Even for FEM, I think the long-term trends have been very attractive. The stock from 2020, which was, I think if I'm not wrong, was almost at 200 rupees, now at 1894 levels, has been more sideways, but then on the longer term basis, the stock has performed quite well. So I would recommend a hold on both of these stocks.
Okay, moving on to the next query then, and Kunal, coming to you because these 2 names are your favorite one, and we just keep asking you on these names. So a viewer named Ramke from Bangalore has been holding firstly AB Capital, 1,000 shares from a price of 80 rupees, and the other one is IDFC First Bank, 5,000 shares from a price of 35 rupees. So going ahead, what sort of a target he should be looking at?
I think I would recommend to hold on to both of these stocks and then look out for, if possible, more additional long-term time frames, say another 2-3 years, if not more, for the stock prices, because these stocks have just evolved into a breakout for themselves. AB Capital has not yet broken past, I think, if I'm not wrong, about the long-term highs or the all-time high levels. IDFC First Bank has done it just recently, breaking past, I think, about 70, 75 odd mark. That was the previous high for the stock price, which means that these stocks have a much more headroom on the upside to go up higher from current levels. Difficult to place a target because those targets would keep on, I would keep on revising on the upside. But then as a round figure mark, you can probably keep 100, 105 as an immediate target for IDFC First Bank. And for AB Capital, I would probably keep 240 plus as a target on the next 12 months plus horizon.
All right. This next one that I have is coming in from Richie. He's writing to us from Andhra Pradesh. Sorry, Kunal, one more towards you. Then he has 10 shares of L&T at a price of 2,250 rupees per share. He wants to know whether he should add some more of this particular counter and at what price.
Well, I would not recommend to add L&T at current levels. So I understand that L&T is one of the top performing stocks from the large cap space from the Nifty 50 pack, and specifically in the last 3-4 months. But then, the stock has this odd tendency that whenever it rallies up, 40-50% in a short span of time, the stock goes into months of consolidation. So the only catch over there is that if L&T gets into a time-wise correction, you could be, investing at a point where the stock is just about to enter into a time-wise range. So it's always better to buy when the stock is nearing or ending a time-wise correction as well as nearing a major support. So I think in that regards, maybe 2,450, 2,500 could be a good support point for L&T. In case if the stock happens to come back to that level, that's the point where you should look to average further.
Okay, moving on, and Ashish, the next query is from Ajay, and he wants to know your take on 3 stocks. Firstly, Sanghi Industries, that's the newsmaker for today. After the acquisition of Ambuja, locked at an upper circuit, so I don't believe that he will get a chance to enter in this one. Firstly, he wants to know about this. The other counter is also from a cement pack, Sri Digvijay Cement, which is seeing a good gains today, as well as NMDC. For a medium-term outlook, what to do in all these 3 names?
Well, I think NMDC is certainly looking good. I mean, the stock has been kind of consolidating. Again, a kind of commodity stock, PSU, so one has to be careful. Sanghi Industries is a good long-term story. Obviously, don't buy it when there's so much of the excitement on it. I think let it settle down. Buy it on a whenever it consolidates or kind of corrects, or at least excitement goes away. And third one was which one was the third stock? Digvijay Cement.
Yeah.
Yeah, I think generally cement stocks are going to do well, including Digvijay Cement. I think the growth in cement is going to pick up going forward. Demand is going to pick up. There's going to be a good secular kind of run in these stocks. So Digvijay also looks good. Again, the run-up has been significant, so maybe one can wait for a decline or a consolidation before entering.
All right, so that's the take coming in on some of the cement names. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, viewers, so don't go anywhere.
Welcome back to Buy Now, Sell Now, show where we get you answers for all your stock-related queries. And to answer the same, today we have Ashish as well as Kunal with us on the show. And Kunal, once again coming to you because one of the stocks that you track closely, that's Devyani International. Nagesh has been holding 600 shares from an average price of 186 rupees. So what to do in this particular name? Is that a sell or hold?
Of course, it's a hold for Devyani International. I would not recommend a sell. In fact, what you can actually do is, because I've been mentioning this consistently, that in case if the stock happens to dip back towards 170 or sub 170 mark, that's actually been a good buying zone. So there are few stocks where there is a certain sort of a price level which acts as a demand zone for the stock prices. For example, Tata Power sub the 200 mark. We had indicated Tata Motors sub the 400 levels, and for Devyani International, I think the stock is at 170, or the support is at closer to 170 mark. So that closer it is toward that 170 mark, you should look to average further so that you can reduce your cost price as well as look to accumulate a larger quantity of shares. I would believe that the long-term charts for the stock look very attractive and would recommend a hold.
Okay, this next query is for you. Ashish is from Sagar. He wants a view on ESAB India. He's unsure if you're tracking it or not, but he's holding this a small chunk of this particular stock since the level of 1,020 rupees per share. He wants to know whether it's a good stock to hold from a long-term perspective because the stock has performed pretty well, whether it's on year-on-year basis or even on a quarter-on-quarter basis. So do you feel the valuations are comfortable for him to continue to stay put with this particular counter or add on some more? What's your take on this one? And also any growth outlook that you have for this?
No, ISAB I haven't tracked unfortunately, so I don't want to comment on it. Sorry.
Okay, on the charts, Kunal, have you been able to check this particular counter? How does it look?
Yeah, it's been one of the more consistent moving stocks, consistent compounders over the last 8-10 years or more. I believe there is no reason for the viewer to exit the stock. Even at current levels, the stock is comfortably above its 200 DMAs, 50-day moving averages. So I would recommend a hold.
Okay, moving on, and Ashish, the next query is from Pradeep, and he's a senior citizen and wants your take on two counters. I'm not sure whether you track these ones or not. Firstly, he has 50 shares of Sigachi from a price of 272, and he also has 50 shares of Carousel bought at a price of 635 rupees. What to do in both of these stocks? Will that be an exit or continue to hold on?
Again, unfortunately, I haven't tracked these two counters.
Okay, any take on any of these names, Kunal?
So Sigachi is something which I track out of the names which you mentioned. The stock is trying to come out of a resistance. I think the previous resistance for the stock was around 350, which it had hit in December 2022. The recent high for the stock is around 320 mark. So it's trying to come back to that breakout point of 350 levels. I would suggest that if you've already bought the stock, you should continue to hold on. You can look to buy even at current levels. The price patterns are seemingly getting better for the stock price. My only concern is that how much time would the stock take to break past about 350 levels. But then eventually, I think the stock, because of the persistent efforts it's making, should break past about 350 levels. I would suggest a hold or an add at current levels. But that breakout point for Sigachi would be about 350 mark.
Alright, this next one is coming from Nafas. He's writing to us from Singapore. He has 2,600 shares of Ujjivan Financial. Average price is 304 rupees per share. He wants to know whether he should hold on to this for the longer term or at least until the reverse merger is completed, or is it better to partially book profits since the price movement has already been steep in this particular counter. What's your take on this one, Ashish? What should he do with Ujjivan Financial?
I think the Ujjivan Financial has finally turned the corner. I think it's just the beginning according to me, and I think should wait for the reverse merger to take place. I think there's a lot of scope for scaling up in this business, and then finally things are falling in place. I think the story could be very, very good and secular. So my take is to stay invested and keep it for a very long period of time.
Okay, so that's the take coming in on Ujjivan. Moving on to the next query then, and Kunal, let me take it from you. This query is from Kamal, and he wants an advice whether to buy L&T Finance at this point in time, or rather wants your take on SW Solar. He wants to invest 5 lakh rupees for the next 18 to 24 months time horizon.
So both the charts are attractive. SW Solar also, I think in the last 1 month or so, it's picked up from 290 to 400, and then from 400 the stock is back towards 380 odd mark. So looks to be a very attractive bet because of the way the stock has run up recently. I would believe that this could be probably an indication of a major breakout which could come by into SW Solar. I would recommend that as a buy. Even for L&T Finance, I think that stock has corrected quite smartly from 140 odd levels to 126 or 127 where the stock is trading right now. So again, good levels to buy the stock from a medium to long term play.
Okay, this next query that I have is coming in from KM Sundaram, who's writing to us from Chennai, Karnataka Bank. He wants to know what sort of a target should he keep for this particular counter, and also if I believe he already has this stock in his portfolio. So should he look to exit or continue to hold on to it? Kunal, also the caveat being that the bank's results are today.
Well, I'm not sure if you're playing for results because that's a very difficult proposition to try and preempt, because I've seen stocks correcting a few percentage points post the results, but then eventually if the trends are very strong, they manage to absorb these corrections and then they come back quite strongly. So I'm not sure whether on post results how would the stock react, but the long term charts are looking very attractive for Karnataka Bank. I would recommend a hold if you're a long term investor.
Okay, but sticking to banks, what's the take, Ashish, on Federal Bank? Thomas V. George has bought 5,000 shares from a price of 95 rupees. So what to do next?
Well, I think no brainer here. I think Federal Bank, along with some of the other mid-cap banks which have turned around and which are well managed in the private sector space, are clear good growth stories going forward. Very clear that you should stay invested here. I think the financial inclusion in India will continue to grow, and that will really help the banking sector as well. And I think Federal Bank is also one of the banks well poised to take advantage of this, well managed and very well. We do not scope to further, further penetrate and increase their business. So very good. If you are time is not a constraint, just stay invested. Don't bother about any short-term movements. Just stay invested for a very long period of time. You should really build a lot of capital here.
So Ranjit is writing to us from Gurgaon. And Kunal, this one is for you. 300 shares of Philip Carbon Black that he's purchased at a price of 156 rupees per share. He wants to know whether he should hold on to it or exit. And if exit, then he wants to know which other stock should he buy.
So I would recommend to hold on to the stock as of now, because the correction for Philip Carbons actually started off much prior to where the markets or many of the mid-cap stocks have corrected, which means that it could probably form a bottom before the indices or the overall mid-cap or the small-cap end of the markets, they form a bottom. So I believe that it's a good sign that the stock has already corrected more than 10% in the recent past. I think if the stock happens to take support at current levels, we may see a bounce back to at least 168, 170. That could be a better level we will look to exit or book profits.
Okay, moving on. And Kunal, the next query is on three names. Out of the three, any stock that you like at this point in time, and the technical take that if you can give. For this query is from Guru, and he wants the take on Campus Activewear, TTK Prestige, as well as Tamil Nadu Mercantile Bank.
Well, out of the three names, Campus is something which I do track. I think the stock had corrected very sharply, so I would avoid suggesting Campus footwear at current levels. In fact, a better play from the footwear space, if you ask me frankly, at current levels would be Bata India. I think at 1700 mark, if I'm not wrong, 1700, 1730 is the last which I've seen for the stock price. Looks to be an attractive proposition at current levels. For the other names which you mentioned, TTK Prestige also is one of the other stock which looks to be into a fairly decent recovery stage. But my only concern is that whether this could be a big recovery for TTK Prestige or whether it could be more short-lived. So if you are a short to medium-term investor, then it makes sense to buy the stock at current levels of 780 for a near-term target which you can keep maybe at 850, 860 for the stock.
All right, this next query that I have is coming in from a senior citizen writing to us from Cochin. He's not mentioned his name. Let me just check. Yeah, it's Marcos Korean who's written to us from Cochin. He has 500 shares of Wonderla at a average price of 280 rupees per share. He's been holding on to this counter for a couple of years. He has good profits also on this particular stock, Kunal. But now he wants to know whether he should book his profits or continue to hold on to it. He's saying he can hold on to it for a few years.
I think you should continue to hold on. It's just seen a good recovery for itself in the last 3-4 quarters. I think if I'm not wrong, 3 quarters back the stock was at 350 levels or 325, and currently it's at 600 plus mark, which means that the bigger breakout has just happened in the last 3 quarters. Ideally, such kind of stocks, they generally unfold their rally into longer term basis. So you might see an odd correction here and there for the stock price, which may happen, but then eventually these stocks, they resume their long term uptrend, which should be on the way up. So I would suggest a hold on the stock if you're a long term investor.
Okay, Ashish, the next query is on IRFC. Rajkumar from Kochi has bought 3,000 shares from a price of 25 rupees. He's a long term investor and wants to know what should be the outlook going ahead.
Well, a lot of action has happened. That's the only thing in these railway stocks, including IRFC. So I think, the outlook is still positive. You can stay invested as long as you're a long-term investor, but perhaps the kind of return which you have seen in the recent past is not easy to duplicate. So yes, continue to hold on, but the kind of at least kind of pare down your return expectations to some extent, because the run-up which has happened in the recent past may not be repeated. It will be kind of a slow mover from here. But nevertheless, I think we'll continue to do well, so you can stay invested.
All right, this next query that I have is coming in from Deep. He's writing to us from Dubai, and this one is also for you, Ashish. He is holding Hero MotoCorp, 150 shares at a price of 3,200 rupees per share. He's saying, given the scenario that is actually transpiring, he wants to know what should he do with the stock. Does it make sense to stay put with it?
I think makes sense to stay put. The company's business model is very very secure. I think the kind of penetration they have in the two-wheeler market in India is not easy for anyone to match, even including their competitors. So I think I think while there is some negative news flow on and including the one which is very recent one, which is the promoter getting into some kind of an issue, some kind of a case against him. The company, this thing that the company is very well professionally managed. So while the promoter getting into a problem is a negative, it is not such a big negative for a professionally managed, well-run company, which Hero MotoCorp is. I think the most of the negative is already in the price, or may be a little more affected by this in the very near term. But the outlook and the long term story definitely is intact. So I think stay invested, ignore the current news to some extent, and stay invested. In fact, if it does for whatever reason come down more, you could even look at buying opportunities. Like I said, that their hold in the two-wheeler market is something which no other competitor can even match. Even that thing is
Yeah.
very very solid, and the growth story for the two-wheeler market is still intact in India.
Yes.
The numbers are very good, so I think
So
stay
that's
invested.
okay, stay invested. But in the meanwhile, we also have Varun Beverages number flashing on the bottom of your screen. What you're seeing is that a good set of numbers being reported this time around, where the margins have seen an uptick of 159 basis points on a YY basis. EBITDA has jumped by around 21%. Net profit has also seen an uptick of 26% on a YY basis, coming at 994 crores with a revenue jump of 14%. And that's why we are seeing the stock inching up higher by around 1%. But let's come back to taking all your queries then. And Kunal, the next query that I have is coming from Krish. He wants your take on SBI Life. He's been holding 225 shares from a price of 1,201 rupees. Wants to know that should he make this as a part of his core portfolio?
Well, you can make this as a part of your core portfolio. SBI Life, I think if I'm not wrong, has also become a Nifty 50 stock. It's done reasonably well, 1,075 to 1,300 plus, where the stock had rallied in last 3-4 months. I remember, I think post-budget, there was a sharp sell-off or a correction for the stock price, but then it's recovered almost 100% of that entire correction, and in fact made a fresh swing high also, if I'm not wrong. So on the back of it, this looks to be a fairly attractive chart. I would believe that maybe short-term wise there could be another 50-70 point correction which could probably still play out for SBI Life. Closer to 1200, I would believe, is a strong support which emerges for the stock prices. So since you are a long-term investor, it looks like, then I believe that it should be a part of your core holdings, and specifically in case of the stock corrects towards that 1200 mark, you can look to add or accumulate further.
All right, on that note, we'll slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of your queries, so viewers, don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. And with that, let's continue taking your queries in the rapid fire, actually. We have Kunal as well as Ashish. And Kunal, quickly coming to you, this one is coming from Sunny. He wants to know SBI Life Sciences, 1,300 odd shares at a price of 360 rupees per share. Sunny wants to know how does it look on the charts?
Definitely a hold.
Okay, Ashish, a viewer, he didn't mention his name, wants to know that can he buy Snowman Logistics at this point in time?
Yes, he can.
All right, this one is from Rima from Pune and wants to know about Ashok Leyland. Is it the right time to buy this particular counter for the long term, Kunal?
I would suggest buy on corrections. Maybe closer to 170 could be a better level to buy.
Kunal, Shefi from Mysore has been holding 125 shares of Angel One from a price of 1,600 rupees. What to do in this particular name?
Corrective wave, for the stock should fall to at least 1,300 mark over the near term. That could be a better level where you can look to average.
All right, on that note, let's just switch focus and let's go and hear out Karan Adani, who is the director at Ambuja Cements, on that latest acquisition.
The way we look at this acquisition, first of all, there are a lot of advantages to the location of this transaction it has to this place. So this company has a plant integrated unit in Kutch. They have 1 billion ton of limestone reserve. They have lignite, which is right next to the plant. So coal is available at a very cheap price. And the idea is that we want to make this plant the lowest cost clinker production plant in the country. And our target is that we want to manufacture clinker at around 1,500 to 1,600 rupees per ton. And the idea is that we want to use the marine infrastructure. So this plant is attached with a captive jetty, and we want to use the marine infrastructure and expand that marine infrastructure and transport the clinker as well as bulk cement from this plant into South Gujarat, into Saurashtra region, and Mumbai, and going all the way down to Kerala. And the idea we are looking at is we want to utilize the assets as well as the synergies with Adani ports and with the footprint of Adani ports and accelerate this journey. And obviously, other part of the rationale behind this acquisition is with the limestone reserve, with the land available and the approvals available, we want to expand the capacity over here much faster. We would be adding another 8 million tons of new capacity in a matter of 2 years' time, and and bring up the capacity to minimum 15 million tons in next 2 years' time.
Right. Mr. Dani, this was one of the unique parts of this acquisition, the usage of marine infrastructure. So this is something which Street is really talking about and appreciating. Talk to us about, once this acquisition is complete, in what kind of timeline further capex will be lined up, which you're talking about 15 million ton. How much in rupees crore terms in capacity expansion are we looking at putting into this company and expanding, and what kind of broad timelines are you working with to start extracting the synergies which you are aiming at via this acquisition?
Sure. So immediately we would be pumping in, after the closing of acquisition, we would be pumping in around 500 crores. And with that, we would be expanding the capacity of cement from 6.1 to 10 million ton. And that will take maximum 6 months time. We would be also implementing a waste heat recovery system. We would be expanding the port facility, deepening the draft over there. And so we are very confident that by end of 31st March, we would be at a run rate of clinker production at around 1,700 rupees per ton. And obviously, the next stage of expansion, the new clinker line, we would be putting, we would be starting the work of it in by maximum by December of this year.
Mm-hmm. Mr. Dani, if you allow us to talk to you about your strategy on cement overall. This is one of the acquisitions. The Street is talking about perhaps any more which you may be looking at, or will it be a mix of organic and inorganic as far as your overall cement capacity and business plan for the next few years is concerned?
No, definitely. So as you know that we have laid out a vision, our chairman has laid out a vision of 140 million tons by 2028. If you see the progress that we have already made, we have announced 14 million tons of cement capacity, which is already under implementation. And we have another 5.5 million tons of cement capacity, both at Dahej and Ametha, which will be coming up online by Q2 of this financial year. And with adding the capacity expansion at Sanghi, we are already at a run rate of 101 million tons by 2025. Of capacity, and the remaining capacity we would be adding through organic route. Most of the plants of Ambuja as well as ACC, we have plans to increase the capacity. We have the limestone over there, and so additional 40 million tons of capacity we will be announcing in matter of next 12 to 18 months for that journey.
Okay, so you got your hands full and your projects all lined up. Does it mean that no more immediate buyout candidates which you are scanning, or that is open? That position is also open, and you are working.
We keep our options open. We keep looking at opportunities. If it comes at the right price, which is very strategic, we keep our options open.